Hello, my name's Adil. I'm bringing you a review of the US markets from an intermarket analysis perspective and give you my take on what's going to happen in the week ahead and give you all my technical levels and my charts, etc, etc. Okay, let's get started here. So basically the S&P 500, let's see what's happening here because the kingpin actually is a Nasdaq, but let's just see what's happening with regards to the S&P. Okay, so from a fundamental perspective, basically we are going to go higher. Why do I say that? Because the reason why I say that is because the whole emphasis has been and purely on yes, I agree, Argentinian situation, I agree, the Portuguese bank situation, I agree, the geopolitical situation, Russia and the sanctions, etc, 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 but they've been there for a long time. Okay, the Argentinian debt situation we all knew, the Portuguese bank situation is old news, that was there the week before. When obviously the stock market sold off based on that for a day or two, and really that's in Europe. It's not much of an impact on the US markets. And with regards to Russia, Ukraine, I think we've already known, and also Israel, Palestine, I think we've known that for a week or two now, and that's certainly been baked into the cake. Okay, so the real, from my understanding of reading between the lines, I think the real, basically the real factor or variable that really rocked the boat until the ship the ship hit the iceberg was when the employment cost index rose, because that is what triggered off talk about interest rates rising earlier than expected. Obviously QE and tapering debate started, etc, etc, and that caused the QE junkies to run for cover. Okay, so that's basically what was happening. Obviously geopolitics certainly had a part to play there. Okay, so what do we notice here? Okay, so it's a pullback. Okay, but it's not a pullback or something that we're going to be really concerned about, because as you can see here, that we had a bearish engulfing day. What happened? The markets negated that the next week, and then obviously off to the races we went. Same thing here, and the markets negated it to a large extent, and off to the races we went again here. So it's not a concern. For my concern really would be, or I won't say concern, but my emphasis would be what the other markets are doing, what overall its peers and its companions want to do. So from my perspective, first of all, fundamentals. The reason why the markets fell was because the employment cost index, everybody got afraid, everybody thought the rate rise cycle would come forward. What happened on Friday? Economic data, labour data dispelled that thesis, and obviously with the average hourly earnings, given the fact that Ms. Yellen's focused on that, average hourly earnings didn't rise as expected, and because average hourly earnings did not rise as expected, then that certainly supports the argument that rate rise cycle will be pushed back. Ms. Yellen will remain ultra dovish, and that obviously causes a short squeeze, and that will be the catalyst for the stock markets to rally back higher again. Okay, because it's all about that QE, or it's all about the easy monetary policy. That's basically what everything is focused on. Okay, now let's have a look at the this is the weekly chart. Obviously you can see the daily chart of the S&P 500. We've held a key level or key support level at 1925. So I expect the 1925, provided that holds, obviously if the situation in the Ukraine, Russia escalates, if the situation in Israel, Palestine escalates, if there's another skeleton in the closet with regards to any banks going under, etc, etc, if the Argentinian situation doesn't get resolved quickly, etc, etc, these are all concerns that we're going to have, and obviously the economic data continues to come out pretty bad. That certainly won't help. So from the US market's perspective, the GDP was stronger, or unemployment data, or the slack in the labour market, as Ms. Yellen states. That's going to be the whole emphasis. So focus on the employment cost index, focused on inflation, remain focused, because I think that will be the key in understanding the FA news flow. So what do I expect? I expect a short squeeze bounce. Okay, short squeeze bounce coming into Monday. That's basically my interpretation. On my fundamental analysis service, I'll be opening up some swing long positions and looking for the market to move higher. Okay, so 1944 will be your first target on the upside. So trying to hit previous support equals resistance, basically. That's basically what the aim will be. Previous support equals resistance. Okay, so yep, 1944, 1952 and 1960. So watch out for those levels below, or above should I say. Okay, they're the levels that we can potentially hit next week. So 1944, 1951 and 1960. Okay, that's basically what we're looking for on the S&P 500. Let's have a look at 60-minute chart. 60-minute chart, obviously the HNS formation target has been hit because it was 1942. We've obviously gone much lower than that. Okay, 60-minute chart, as you can see there, we've had a bearish engulfing candle that's been negated, so we've had an outside bar. Now we're looking for a bull flag. Boom, up we go. Okay, so watch out for the 1945 level, etc, etc, etc. 10-minute chart, what do you see there, folks? Beautiful inverted head and shoulders pattern. That's exactly what I expect to play out. If you look at my FTSE video and if you look at my JAX video, you'll see that the reason for me being bullish on the DAX, reason for me being bullish on the FTSE is abracadabra. Okay, it's right before you. Okay, so this is only the one obviously variable that I've discussed. This is just an explanation or an interpretation or an insight into my understanding or trading based on intermarket analysis. Okay, folks. So up over 200 MA above here, unfilled gap up here. Watch out for this. Obviously the market sold off prior because we had a failed inverted head and shoulders. What happens when you have a failed inverted head and shoulders? You have an emotive sell-off in the opposite direction. That's exactly what's occurred. So don't be surprised if we close 1970 gap next week, folks. Okay, do not be surprised. Why? Because it's all about the employment cost index. Focus on inflation. Ignore geopolitics and socioeconomics because the stock markets don't care. It's all about the QE juice. Okay, so that's basically where we are from that perspective. Now let's have a look at the Russell, because the Russell is the one that leads the S&P 500. Yes, we have broken this key trend line, which is a concern for me. But for now, going into Monday's trading, we are into massive, major horizontal support. Previous resistance equals support. HNS target has been achieved. The 83 was a level. 83 is exactly where we bounced and short squeezed from. And once a market obviously achieves its HNS target, what happens next? Short squeeze. Okay, so if the Russell has hit the HNS target and now about to short squeeze, the S&P 500 will also short squeeze higher to 1944, 1952, 1960. And like I said, don't be surprised if the S&P closes at 1970 gap. Okay, hopefully you're still with me at this point. I'm going to move on to the next variables I observe. Is the Dow and the Dow transports. Okay, so the Dow is almost near its 200 MA. Okay, so 16333, 16300 will be the major support there. We have completed more or less the there was a HNS here as well. We have more or less completed that, but from my perspective, obviously we have sold off quite substantially. We entered the 200 MA, so that's coming into support now. Okay, this is the Dow Jones Industrial Average. Dow Transports will give you the major clue. Dow Transports, as you can see now, we are into horizontal support as well. So let's just bring this up. Obviously, yes, we have broken this key trend line. This was a very important trend line, which obviously unfortunately we breached. I wouldn't say unfortunate, it's fortunate really. It's just trading, that's basically what it is. Okay, so we've broken that. Okay, so we are into horizontal support here, horizontal support here, and then obviously you've got horizontal support here as well. So one of the reasons why I expect to bounce here is because the oil prices obviously have fallen quite substantially, and that will help the transports bounce back. Okay, that's basically what we're looking for. So both areas are into support. Now let's have a look at the Nasdaq. So the Nasdaq on the 10-minute exactly the same as the S&P 500. As you can see, inverted head and shoulders formation, and then bang off we go to the races on the upside. And again, we need to close this gap at 3975. Don't be surprised if that closes. Okay, inverted head and shoulders target for now is 3855 to the neckline around the 3595. 40 points up, we're looking at around 3635 and higher. Okay, that's basically what we're looking for early doors. Let's have a look at the daily chart on the Nasdaq. Daily chart on the Nasdaq, as you can see here, we've more or less closed this gap at 3836, which aren't too far off. Although we have broken this key trend line, so it is a concern for me. But we certainly expect a bounce initially, and then obviously we will have to assess. Although we have left an unfilled gap behind at 39.75, all gaps must close. Given the fact that the Nasdaq has been uber bullish as of late, don't be surprised if that gap closes. Okay, so this is basically where we're at, looking for a potential retest around the 39.30 of the trend line that's been breached. Okay, now let's have a look at the bios. The bio, like I've already explained, we've got an inverted head and shoulders formation. So the biotech is certainly remaining bullish. We have inverted head and shoulders. We've held a 61%. We put in a doji. on Friday. Again, that's an argument for the Nasdaq to go higher. Again, semiconductors obviously have held previous resistance equals support. We're putting a doji there now. Let's have a look at smaller time frame, see if we can spot anything. Again, honky dory, we've got a potential here for the markets. Obviously, we put a double bottom in intraday, and now we're looking for this market to certainly short squeeze higher. You've got this inverted head and shoulders formation here as well, and bang, off we go to the races. We need to close this gap here. Once we close this gap, honky dory. Okay, so keep an eye out for that, folks, going into next week. Okay, and so far so good. Okay, so this is basically where we are. We've held double bottom. We've got an unfilled gap above. Expect this market to propel higher. So I've given you an understanding there with regards to the US markets. I've given you the fundamental catalyst, why I expect a short squeeze. I've given you the technical basis, why we were going to move higher. All we need now is geopolitics to de-escalate, and a situation with regards to the Portuguese bank, and any good news will do basically, and that will obviously go well, basically everybody